34% previously in the latest escalation of the trade war between the two countries. Let's get out to Emily for more on this, on the latest from China. Emily, break it down for us. So what has China announced, and what's the key message here from Washington? For Washington, I should say.
We are hearing, Juliana, of course, keeping track of all the latest developments with the tariff increases, which has been coming through thick and fast all week since starting on Monday. But we're just hearing from the Ministry of Finance that China is going to be raising tariffs on all U.S. goods from 84% to 125% starting on April the 12th. It then went on to say that it plans to ignore any further increases announced by Washington thereafter. The Ministry of Finance says that it no longer makes economic sense if the U.S. imposes more tariffs, and given that there is no longer any possibility of market acceptance for U.S. goods exported to China under the current tariff levels, if the U.S. side subsequently continues to import tariffs on Chinese goods exported to the U.S., the Chinese side will pay no attention to it. So it sounds like for China, this will be the ceiling at 125%. So if we just look back at what's happened over the past week, when we had President Trump at the beginning of the week, ever since he announced the 34% tariffs, standing in the Rose Garden with that big chart, it then subsequently went up to 84%. Then 104, 125%, and then just this morning, Asia time, you guys are just waking up, but the White House clarifying that they added another 20% to basically reflect the fentanyl, how they're not happy with, of course, all the fentanyl trafficking. So 145% from the White House on Chinese goods, and now the latest from China is 125% on U.S. goods, and that takes effect from Monday. It's what was supposed to be Liberation Day for President Trump, that he announced all the tariffs, the reciprocal tariffs on the whole world. He has since dialed that back, and what's been a constant this week is that this is now a trade war between China and the U.S. So we're going to be continuing to watch the latest developments here in this ongoing trade war, but now it's 125% on U.S. goods for China. Back to you.
Emily, what really stands out to me here, looking at this statement and listening to you, is China's comments that if the U.S. continues to play the tariff numbers game, China will ignore it. However, if the U.S. insists on continuing to infringe on China's interests substantially, China will resolutely take countermeasures and accompanying it to the end. And why this stands out to me is that, Emily, it suggests that we may be looking at an escalation beyond just trade here, which is really what the market has been perhaps most concerned about, that this could shift from a trade war to a war on financial markets and a financial war.
Yeah, and of course, so the market has been tracking the levels of the yuan, whether it's going to be depreciating, whether China will be using that as a method to fight back, which would then, of course, put pressure on the U.S. dollar. And we're also tracking, of course, treasuries. China is the second largest holder of U.S. treasuries, I think amounting to something like $761 billion. Whether or not they'd be making a move there, that remains to be seen. Some other methods, something that we have been tracking this morning, Asia time, is that China is going to be deciding to lower the number of Hollywood films that will be allowed to be shown in the Chinese market. This basically is a very symbolic move on a Chinese part, which has, little ramifications for the Chinese market, but very, very symbolic. This is a big Hollywood export that would go into China, but over the years we've seen a decline in the U.S. movies being shown in China. Just last year there was 33 movies that were permitted to be, of course, shown in the Chinese market, and they're going to be lowering that to 10 films each year. So we are going to be keeping an eye out on what methods that China is going to be using to retaliate, if you will. President Xi Jinping met with the Prime Minister of Spain today in Beijing, and he's headed off to ASEAN next Monday, starting with a trip to Hanoi and Vietnam, which will also take him to Malaysia and Cambodia. So we are seeing how the Chinese side, for its part, making friends with various regions, certain alliances, if you will, in this new trade situation. Juliana.
Emily, really appreciate you jumping on to give us the color. Rory Green joins me now, Chief China Economist, Global Data TS Lombard. Rory, thank you so much for jumping on to help us understand this escalation from the Chinese. Can I just get your reaction to the news this morning first off?
Yeah, it's a big move from China, but I think it's consistent with their past measures. This is tit for tat. They're not going beyond what Trump has done, and really reciprocal retaliation we're seeing from China here.
Do you see the two sides actually coming together? Do you see talks happening? And if so, when?
I still think both sides want a deal. The signaling before Liberation Day from Beijing was very strongly in favor of a deal. And even if we look at today's tariff announcement, you can see that China is 125%, the US is 145%. So there's a gap there. That gap is the fentanyl related tariffs of 20%. China has been pushing hard on the fentanyl issue, and this perhaps offers a window for a deal or for some de-escalation of tension between the two sides. That being said, any kind of off-ramp de-escalation, reduction in tariffs is going to take some time to get to, even if both sides, Trump included, are broadly keen to have some kind of deal arranged.
I read a fascinating piece from The Economist over the weekend, and they used fight terms to describe the U.S. and China, saying that the U.S. packs a bigger punch, but China has a stronger chin. And I think that's just an interesting way to think about who's going to blink first here. How do you see that playing out? Who is going to blink first?
Yeah, that's a great analogy. And we put out a report on Monday quoting Mike Tyson. Everyone's got a plan until they get punched in the face. And we can see, I think, from the pause in Trump's tariffs that the market delivered a heavy blow and he blinked. He has a weaker chin. If you look at China, the macroeconomic situation and the equity market situation over the past couple of years have been painful. And it's only recently that Beijing has started to pivot on stimulus. So if we're talking over which side can have a greater pain threshold, a greater tolerance of pain, it's certainly China in this situation.
And talking about the market action, the bond market action that we all think is what led President Trump to backtrack on the tariffs, there is sort of speculation, theory out there, I guess you can call it, that China might have been part of the selling. They're massive holders of U.S. treasuries, and we never have a lot of color in real time what China's doing. Do you think it's possible that China was a contributing factor there, selling some of their holdings of U.S. treasuries to try to trigger this reaction from Trump?
I don't think it was a deliberate tactic on the part of Beijing. There may have been selling by individual holders, by commercial banks, but I don't think at this stage it was a deliberate tactic. If we get towards a financial war situation, which you alluded to earlier on the program, that potentially is one of China's options. But it's worth noting that the official numbers, I think China is 2.7% of outstanding treasuries. Unofficially, that's probably a couple of percentage points higher. But it wouldn't take much of a Fed intervention to offset any kind of China forced sale. So it's possible that it comes in the future in a financial war, but not, I think, at this stage.
And when it comes to the possibility of a financial war, I think the primary concern or primary consideration is that Beijing and the PBOC could choose to devalue the currency, weaken the yuan. Do you see them moving down that path? And if so, what would be the catalyst for it? It doesn't feel like we're there yet.
Yeah, I think the response from the PBOC is very much managed depreciation of the RMB. When we're at this level of tariffs, it's difficult to gain competitiveness via currency depreciation. So the logic for allowing the RMB to weaken is more so via a focus on the domestic economy. The PBOC is cutting rates, going to pump liquidity into the economy, and thereby cause the RMB to weaken rather than looking at the RMB to gain export advantage. Where I think a stronger devaluation is a risk is if the US does escalate into a financial war. If we have forced delisting of Chinese companies from US stock exchanges, if we have scrutiny of Chinese or Hong Kong banks, then market needs to price in a stronger financial decoupling, and perhaps markets push the RMB lower and the PBOC will then struggle to defend it whilst supporting the domestic economy. But for the moment, if the ball is in China's court and they've got full control of the exchange rate, as they do now, it's only a managed appreciation that is coming.
Rory, can I take it back to the immediate impact of these tariffs? Here in Europe, we're talking a lot about where these Chinese goods are going to go, the ones that were once destined for the U.S., but now no doubt are sitting in ships, in ports in China, in the U.S., and perhaps in other places around the world. The Europeans are pretty keen to make sure that they don't get flooded with these excess goods. The Chinese at this point are saying they're going to stimulate demand such that they can absorb a lot of these goods themselves. But how realistic is that? And what do you think happens next with these goods? Where are they actually headed?
Yes, so I think that the first order impact is that during this 90-day tariff pause, the trade rerouting is just going to be enormous. You've got this huge incentive to arbitrage the price difference, 145% tariff versus flat 10% on the rest of the world. So those goods, I think, the transshipment of Chinese goods is really going to kick off over the next 90 days. And then beyond that, the flows to the US will look for other markets. I do think China is going to stimulate the economy fairly aggressively. Already it was moving in that direction. We saw a very, very strong pivot starting in September last year and really accelerating through this year. The 5% growth target is 5% regardless of tariffs from the US. So they're going to need to do quite a bit to get close to that. So the domestic demand side in China will help for sure, certainly relative to previous years. I think we'll have the strongest domestic growth story in China since 2021. But the loss of the US market is massive, and those goods will flow elsewhere.
Rory, really appreciate you jumping on with us. Rory Green, Chief China Economist, Global Data at TS Lombard. That's it for us this week. Worldwide Exchange is coming your way next.